Good afternoon. We're about to get started, so please turn up the volume and take your seats. We're delighted to have over 260 participants from Asia, Europe, and North America, representing such a diverse range of stakeholders in policymaking and the investment community. Please do take part in the conversation, either through social media, using the hashtags and accounts being displayed on your screens, or through the Q&A tool on your screen, available across all devices. I will now give the floor to Mirela Agache-Durand, Vice Chair of AFG, for the opening remarks.
Mesdames, Messieurs, dear friends, it is my pleasure to open this new edition of AFG European Conference. AFG represents the French asset management industry, 680 companies operating across France, managing more than 4,000 billion euro and employing directly and indirectly around 85,000 people. Our annual Brussels conference, this year it's remote, but we hope one day to be able to do it again in Brussels, has become a forum for the investment community from Europe and beyond to discuss issues our industry faces in delivering more value for citizens and society. We are delighted to be joined today by Clement Beaune, Minister of State for European Affairs. Monsieur le Secrétaire d'État, it is an honor for us to have you with us, and you have the floor.
Moment for France and I think for the European Union, I hope, which is the incoming French presidency of the Council of the European Union. So the place where ministers representing member states meet and decide on our legislation. This type of presidency is a rotating system, so it's quite rare for a country every 14 years roughly to be in this position, and it's very important to make it as useful as possible to bring forward some key proposals which we are focusing on for now 4 years at the French level. I would like to be as concrete as possible to insist on 3 pillars of this presidency on which we do expect to get results, because we have prepared, we have fought for these ideas for now more than 4 years, as I said, and we're seeing that because some texts have been proposed at the European level, we can now reach an agreement, a compromise, our political orientations in the coming months. The first big topic and big priority of this presidency will be climate. I don't need to insist on the importance of the topic, not only for the EU, but I think the EU has a very clear and probably the clearest and most ambitious policy in this respect and this matter. We have defined first as a region, as a single market, our common goal in 2019, which is to be carbon neutral in 2050. Some big players have now been following, but there's no such a big market with such a big ambition. And we have done more than this. We have set up an intermediary objective for 2030, which consists in reducing our emissions already by 55% by then, in less than a decade. And not only the objectives are set, but more importantly, there is now a package of proposals, legislative proposals, which have been made in July, the European Commission last year, or this year actually, sorry, which have the concrete objective to define sector by sector the tools and the precise measures to reach these 2 key goals for 2030 or for 2050. It will be our responsibility as presidency next semester for France to make this move forward. I want just to insist in this package on one piece of legislation which is very important, and I know it raises some questions. It's called the Carbon Border Adjustment Mechanism. Sorry for the name, which is not extremely appealing, but beyond the technical denomination, it's something absolutely crucial if we want Europe to be very ambitious on its markets, to ask its industries, its economic sectors across the board to green their production, their processes, their products, but to remain competitive by having a kind of environmental anti-dumping system, if I have to simplify. And this is this mechanism, this CBAM, Carbon Border Adjustment Mechanism, which will be very pragmatic in our view. We need to start with some sectors to see how it works, and probably at the same time to be ready, and we are ready to do so, to open international negotiations with like-minded countries or powers, the US maybe, the UK maybe, some partners in Asia would be ready, I'm sure, to do so as well, to define common carbon pricing system. But in the meantime, it's very important that in Europe we are a leader in this, and we set this mechanism for the first time. That will be a concrete priority of the French presidency. A second area of important action and priorities during this presidency is digital. Of course, the digital transformation is very important. We have here again at the European level, because of the size of the market in particular, the opportunity at this right scale to define relevant regulation on the legal responsibility of the biggest platforms. We cannot be in a world in which we do as if the biggest platforms, whether they are research engines, marketplaces, and so on, are seen as purely neutral intermediaries, not responsible in any manner for the contents they spread or for the products they sell. It's not about damaging them, it's about setting up the right framework of responsibility. We can again do that at the European level. We can set the right standards, I think. Of course, and I do insist on that, especially from a French perspective, our ambition is not to be only about regulation. We don't want to be the regulators of other successes, and we don't want to target one particular set of digital players depending on the nationality or other parameters. We want to be fair and to regulate well, and to set this regulation as a world standard, a global standard, as we did, I think, with privacy rules to a large extent. This also means that in the tech sector, we need more investments, we need more private capital, we need more unification of our regulations and legislations inside the single market of the EU. Otherwise, we will not have the right framework of innovation beyond the regulation in the digital sector. The third element is about the social agenda. Maybe I will be more brief on this because it's, I think, quite well known, and it's important as well in a post-crisis, well, I hope it will be post-crisis soon, era, or to prepare for it at least. We need to adapt our social model in Europe, which is, I think, one of our strengths, to the new reality, to platform workers, to social dumping, which can happen within our single market and which is sometimes undermining the functioning of our single market. We did it with some concrete legislation regarding what we call posted work 3 years ago. We want now to do it with setting up a common framework for minimum wages across the EU. And that will be one of the achievements we expect and we will fight for during the French presidency. Beyond this, I think what we need, and this covers, of course, the digital and green transitions in particular, we need to reflect, to think about a medium to long term growth and investment model and strategy at the European level. I think when we look at the economic response to the recent crisis, which we are still going through, the EU or EU countries have been quite efficient, sometimes the most efficient, at protecting their economies, protecting a lot of sectors, jobs, much better than we did in the previous financial crisis 10 years before. And the level of support was very comparable to the one we saw in the US, in some sectors even bigger. These social nets or this protection has been strong. We, I think, have been much better than expected in a way, building on the recovery plan we agreed on during the summer 2020 at the European level in the recovery response. Now we have plans in each European country. We have a common debt to finance part of these recovery efforts. What we still don't have at the EU level is this investment strategy, this plan for the next decade, 2030 or 2035 at the European level, regarding the key sectors we want to invest in, the adaptation of the financial sector in particular, how we work and regulate this, or work with the businesses. We don't have the new fiscal rules we need for this strategy. It's not a silver bullet approach. It's different pieces that we have to put together, choosing some industrial priorities, investing private, public in some key sectors, changing our competition rules, adapting our fiscal rules to some extent. All this will be discussed. I don't have, of course, a final answer right now during the semester of the French presidency with the EU27 leaders during this moment. And this, we want to make progress so that by the end of the year 2022, when we have, for instance, to plug our fiscal rules, and also working as France with the new German government to define this new model for growth and investment in the next 10 years or 15 years, as I said, at the European level. In this respect, just to finish on this, I think you can play a role, the financial sector can play a role, asset managers in particular can play a role. We will have some text legislation at the European level which are directly important for you, and you know about them. The extra financial performance, very important. The debate on taxonomy that we want to move forward on and to find a solution on in the very coming weeks. And I think if we find here again the right balance between innovation and regulation, if we find and set up quickly standards which can be extremely useful because they are common for a market of 450 million consumers, inhabitants and citizens and their businesses, we can be ahead. I think, for instance, what we take this debate about responsible capitalism, as we call it sometimes in Europe, and AFG, what we would do with due diligence, the rules on investment, private investments on taxonomy, the greening of our economies, we can be first in setting these standards, which could give an advantage to the European market, which I think, and I want to finish on that, has also proved its huge resilience and stability, even when there were some difficult moments, difficult political moments, difficult crises as we go through all over the world, the sanitary crisis and its economic consequences. I think the European model, I'm not saying it's the only model in the world for sure, but has proved extremely strong. And we have proved also that we were not doomed to act at the EU level too little, too late, as we have sometimes done, to be very frank, in the past. But this time, on the sanitary front that I mentioned, on the economic response to this health crisis, we have managed to act together quickly and to be, I think, creative and resilient at the same time. So this is an asset we want to protect, to strengthen, not only during this short moment, which is the French presidency, but building on this during this semester and beyond. Thank you very much.
Thank you very much, Minister, for spending time with us. We will now start the panel debate with those very kind words from the Minister, wishing you all the best for the upcoming months as you're taking over the presidency. Merci, Monsieur le Secrétaire d'État.
Merci beaucoup. Thank you very much to all of you.
Merci à vous.
Very well. So, Mirela, Margarita, I suppose we can now start the panel debate. We're still missing, though, Florika Fink-Hooijer, who's trying to get in the conversation here. She's having some IT issues. Actually, I can see you now, Florika. So I hope you can hear us very well.
Good.
Perfect. Excellent.
Okay.
So thank you very much for joining us. So we have with us tonight Florika Fink-Hooijer, Director General for the Environment at the European Commission, Mirela Agache-Durand, Vice Chair of AFG, but also CEO of Groupama Asset Management, and Margarita Pirovska, Director of Policy at the United Nations Principles for Responsible Investment. Thank you very much for being with us tonight. I suppose we can get started quite quickly, especially given the very good insights we've had on the upcoming months from the French Minister. And my first question would actually be to the Director General, Florika here. I suppose what the minister alluded to was the evolving regulatory landscape that we have seen over the past months, and the pace of reform that we've seen in the latest times. So looking at the financial sector and its purpose, as the minister alluded to, I think in terms of building resilience and having that first mover advantage worldwide, how do you feel? How do you assess where we are currently in terms of the financial sector's contribution to where we should be vis-à-vis the ESG transition?
Okay, probably not as far as we wanted to be, but also let me perhaps explain where we come from, because the Green Deal, which is now our policy overarching framework, is obviously always conceived. It was always conceived as a social but economic growth strategy, clearly, and it's all about going sustainable. And that means we now mainstream the sustainability into all types of, whether it's environmental performance and quality objectives, into transport, into product policies, agriculture, but also financial market policies. And from the European Commission, where I come from, we're always about regulation, but we also know that the industry wants the financing, and that's where you all come in. And that's why we often speak about we have to green the finance, but also we have to finance the green. And that means, what do we mean by greening the finance? Because we really need to, that's not on my side or the noise, I have to admit, which is coming from somewhere else. So when I said greening the finance, we want to direct both. We need the public finances, which we go into the green, but also the private financing flows really away from projects that are harmful for the environment and towards projects that are doing no harm or are more sustainable. And when we talk about financing the green, it's basically the same. We need to mobilize the more resources to go into green projects. And we have, I mean, this is a figure that is quite known. We have a huge need for initial extra investment. I think it's often, the figure is the ballgame figure is 470 billion per year. Most of it goes into energy and climate to reach these targets, but the other one is a big share is also having to go into meeting the environmental targets, which means halting biodiversity loss, going for sort of clean air, clean water, waste management, and the rest then has to go into, let's say, transport and infrastructure. And therefore, we need clearly also very reliable and sustainable information about the markets and the financial market participants and the companies. And that's where taxonomy comes in, and also the disclosure and reporting requirements that we are now putting into the regulations. And that's where we stand, basically.
Okay, thank you very much, Florika. So just to get a bit more into details here, so the message we get is we can certainly do more, but we're on a track here. How long do you think it will take us, or do you hope it will take us to complete the major steps we need to take towards a more sustainable economy as envisaged by the Green Deal?
Now, normally we always say this is the decade on which we have to make that transformation happening, right? It's until 2030, which is not very much because we're already starting with it. When I speak to industry, it's a huge transformation they are heading for. You have seen, for instance, the chemical industry just came out with a report about the cost, but that means cost means also investment possibilities for you. Really quite a lot of cost. We hopefully give some of the regulatory predictability, but I think the window in which we have to make this transition happening is almost closing. And when people have listened to the COP26, you know that there's a huge amount of work ahead of us. And I don't want to say it's the next 3 to 5 years, but in principle, we're talking about it. But what is important is to start, and forcefully.
Excellent, thank you very much. Now turning to Margarita. So in your role as Director of Policy at the UNPRI, you have a unique viewpoint about what's going on in the world. So how does what Europe does compare to what's going on in the rest of the world? Of course, we're not trying here to rank regions, but still would be nice to get an overview of where everyone is heading at the moment.
Thank you, Alois. The EU has started a very important process of overhauling the entire financial regulatory framework for many years now. And we do monitor the development of policies and regulatory revisions around the world in more than 80 markets. We account for all policies that support, promote, or require the incorporation of ESG factors, investment decision making. And it's true that the EU has quite an important advance here compared to other markets. But the number of policies that we've been monitoring around the world has been continuously exponentially increasing, and year after year we see more and more policy reforms in different markets that point towards responsible investment practices. Those policies are around ESG disclosure. They're around the topic of redefining investor duties to take into account ESG factors in investment decision making. There are also new type of policy tools like the taxonomy that Florika just mentioned, which is a very important tool to reorient capital markets on a sustainable path aligned with the Paris Agreement goals. It is also a disclosure tool, so it is a very interesting policy development, and we see taxonomies being developed or discussed in markets outside of the EU as well. So the EU does continue to lead. We have published the latest update of our database in September, and there is a substantial increase even in the EU over the past 6 months since the release of the latest sustainable finance package in April, and also the latest developments, including the updated sustainable finance strategy. So there is really what we see in the European Union is a strategy to hardwire sustainability throughout different financial regulations, so that one thing is clear, that ESG incorporation is not a different type of investment strategy, that sustainable finance is not optional. And as Florika mentioned, we have little time. The transition is very steep, but I believe in the EU policymakers are really equipping markets to address this steep curve and create a new baseline for all financial market participants, especially for asset managers, who will be developing new tools across the board that will not be an optional green part, but embedding sustainability throughout their strategies, and the regulations are there to support that.
Thank you very much, Margarita. So what I get from you is that Europe is quite ahead of the curve here, also almost setting the pace. Is it that explicit to the rest of the world that Europe is really trying to hardwire sustainable finance across all types of industries, or do you think there's still a lot of engagement and educational work to do to explain what Europe is trying to do to other regions in the world?
No, I think and hardwiring sustainability into financial regulations is an expression I'm borrowing from Ashley Alder, the chair of IOSCO. So it's not just a European phenomenon, of course not. All regulators in big capital markets have been looking at those developments and understanding to what extent these are really existential. It is about transforming the purpose of financial markets and updating regulations so that the new rules of the game are very clear to all market participants. This is where we want to go. So there are different developments in Asia, in the US. However, we see the same types of policies being developed, even if there are differences between different jurisdictions, between the EU and even within EU markets, and then Asian markets, Japan, China, Australia, US, Canada. Every market is different, but we see the same regulatory requirements. These are about disclosures, duties, and stewardship. And we see the same types of developments that really aim to address the different aspects of the investment value chain and the regulatory framework that upholds it.
Thank you, Margarita. Now turning to Mirela. So Groupama Asset Management serves clients in several countries in Europe, but also in the rest of the world, mainly in South America. How have the changes in the EU framework impacted positively or negatively the kind of conversation you've been having with your clients all over the world? And how do you try to make sense of everything that's going on with them? Because we've just seen with Margarita, there's lots of things happening in the world. And one key issue is, of course, making sure that EU developments also match other regional developments to better serve customers who have a very global approach to their investment strategies.
Well, I really do agree with Margarita to mention that we went from a world where responsible investments was a nice to have type of investment towards something where it is a must-have type of investment. So the asset management industry all over the world and in Europe mainly understood this evolution, and we try to make this evolution the most solid basis to be able to deliver to our clients what they are expecting. Going back to how we cope with clients, well, I think in France we have a little bit of a chance because in the French regulation we already had under the law of Article 173 an obligation to speak to investors, to institutional investors about ESG, and this make this dialogue very early into our discussion with the investor, and gave us a little bit of knowledge on how to go forward with this. And mainly when we go toward more retail type of clients, to be able to make efforts in terms of explanation, education, in terms of ESG investing. I just want to mention that for the last year or two, we observed that in the retail market, there is an intense appetite for ESG products. If we are looking in our company, we already observe it. But if we look across the market, there is retail market is pushing much more for today for ESG investment solution. And this EU framework, which give us this bigger scale to cope up when we create and when we design investment solution for clients, change the speed to which we need to advance. We have much more bigger flow of data to cope up with. We need to speak to investor, to asset manager, to authorities, to financial market about ESG, and the capability we have to be able to make this dialogue successful will be key to be able to deliver an ESG transition. So it is a very hard investment in technology, investments in processes and peoples and skills, and also in education to be able to accompany this transition toward ESG and responsible investments. Well, I think Groupama IM has this knowledge because we started very early on this path. Our first SRI fund was launched in 2001, and our first ESG team was in 2003, and our first portfolio scoring tool was in 2005. So This gave us a little bit of an ability to navigate the complexity of this regulation, this new ESG regulation. And we think we are in good path to deliver investment solution to institutional and retail clients with ESG criteria.
Thank you very much, Mirela. Just before turning back to Florika about one of the issues that Mirela alluded to, just a message to the audience. We're starting to get some questions in through Slido, so please do feel free to use it and address some of the issues with our speakers. So Florika, just getting back to one thing you mentioned, it's about the industrial transformation that we have to go through and the deep changes that will be needed industry by industry, including the financial industry. Mirela just alluded to the fact that some of the first attempts they've had at Groupama Asset Management about dealing with ESG and incorporating ESG date back to 2001. And 15 years later, I suppose the path of Groupama on ESG is speeding up. However, this is a clear example that it can take really several years up to decades to transform one single asset manager and put it and just transform the culture into an ESG one. Is it something that you wouldn't have expected from the financial industry? And is it something that you think will be manageable, trying to meet the 2030 deadline that you have set yourselves to achieve the major changes as part of the Green Deal?
I think we not only have expected it, we actually think the investors are embracing it. Clients now want really to know to what extent their products, the ones they're investing in, are respecting environmental but also social or governance targets. And as it was just said, there's a very growing demand for sustainable products on the market. And therefore, I think also the fiscal intermediaries, they need to know what information is out there. And I think there's a huge difference from now to a few years ago, because now, especially with climate change being so much on the forefront of everybody's minds, everybody sees it, feels it, experiences it. And you know that if you don't go into the sustainable way, you simply will not have over time growth, and it will affect us all, and it will come to losses. And that's where it comes in. And I think already today you're getting easier money and investors to let's say invest into a floating whatever windmill, offshore windmill, than you will get anybody to invest into a coal plant. So I think it's quite important that the losses are also at the forefront of the mind, and the losses are biodiversity losses and ecosystem degradation losses, which have not been so much known or taken into account so far. I mean, everybody really looks always about climate losses, and there you have even stress tests and carbon tests for banks. But I think now it changes a little bit. And by the way, perhaps it's something I can disclose now. We are together with DG FISMA now planning a study on the financial risk of biodiversity loss and ecosystem degradation. And we hope that this study comes out by the end of next year, beginning 23. But the terms of reference are now being already finalized as we speak. And why is it important also for asset managers? Because the asset that you are now promoting or that you're holding might have more or less a value, but they might also have over time less value because of biodiversity loss or degradation. And therefore it is quite important for you to be aware of that, because then you are bringing these assets into the market, and then you influence, yes or no, the stability of the market, and therefore there's again sort of a systemic impact. And I have to say, this is not the same than natural capital accounting. Natural capital accounting was always on what is the value of nature. And of course, it's a huge value, which we only now realize. But we are looking at what would be the loss in case we are not going sustainable. And I think that's something where we really have to be mindful of. I think even in Basel III, you might have to look at that. You might have to stress test in the future also biodiversity loss. And I think all the market instruments that we are looking at, the directives, they're all in the future about giving information about all the risk. So not just the sustainability value, but also the climate risk, the biodiversity or environmental risk. And I think that's an important message I perhaps want to share, because in a way you would have to also adapt in a way your IT system over time into capturing these data and this loss data. And that is not necessarily a bad thing. And you will say, oh my God, this is cost and it's very administrative burden. But that's why I come back to taxonomy. We would use the same indicators everywhere for the loss as well as for labeling something as being sustainable or not. And I think that is what is coming, and which will also be linked to all the regulatory proposals that are coming. Perhaps I'll stop here.
Very well, thank you very much. That's very interesting, actually. So Margarita, we've just heard that, the message is, please broaden your understanding of risks and losses. Is this something you think the wider global investment community is ready to engage with? You're on mute, Margarita.
Apologies, after 2 years online, I should know this. But yes, this is absolutely something that we're looking at and working together with our signatories. So incorporating ESG, as Mirela was also speaking to, is the new baseline. But this is not sufficient to make capital markets sustainable and aligned with our sustainability goals, which are now in front of us, especially on climate. They're very real and they are very ambitious, but they are feasible. So what can we do to achieve those goals? And what can financial market participants and investors and asset managers do to implement this long-term strategy? So at the PRI, this is really reflected in our new strategy, which is about building a bridge between risks, opportunities, and outcomes, real-world outcomes that Florika was talking about, such as the impact on biodiversity and the sixth mass extinction, and what can it mean for economies, for industries that rely on ecosystems, on the biodiversity as we know it now. What investors need to know, and they are realizing it more and more, is that all investments have outcomes, positive or negative, intentional or unintentional. And those outcomes on the real world, on real economies, may be very tangible, and they may affect the ability of investors to generate financial returns in the future. Those are systemic risks. And if those systemic risks can affect the ability to generate financial returns, which is the primary objective of all investors, right? If such systemic risks, such as climate and biodiversity, but also the aspects of just transition and inequality and other social issues, if these can affect the ability of investors to generate financial returns, then investors need to understand those risks and need to manage them accordingly, not just by integrating ESG issues in terms of risk management, but they also need to deliberately set objectives alongside objectives of financial return. For example, like investors who are aligning their portfolios with 1.5 and setting themselves like objectives in terms of climate mitigation or other environmental objectives or social objectives. So this is work that we did with our partners at UNEP-FI and the Generation Foundation called the Legal Framework for Impact, where we commissioned the law firm Freshfields to look whether actually investors can do those things. Can investors have sustainability objectives, other objectives than financial return, such as sustainability objectives? And Freshfields led that analysis over 2 years, over 11 jurisdictions, including the EU. And the answer is, generally, summarizing 500 plus pages of research, legal research, is that yes, investors can do it, especially in cases where such sustainability issues will affect their ability to generate returns. So the topic of outcomes is really important for investors. And we're working at the PRI to support the investment community understand how to bridge the gap to outcomes, how to invest for impact, for sustainability impact, how to shape those outcomes of investment decisions. So I think this is really the next level of responsible investment, where not only investors insulate their portfolios from ESG risk, which is a really logical thing to do, and many investors, as Mirela testified, have been doing this for years. This is a basic fiduciary duty of investors, but beyond that, investors should pursue sustainability goals, should pursue goals that are aligned with the industrial policy of the EU, of the markets where they operate, really to contribute to drive this transition in the most optimal way, not only for their portfolios, but for beneficiaries, for future beneficiaries, for communities more broadly, to have an optimal outcome in the long term, not only in environmental and social terms, but also in financial terms.
Thank you. So, Mirela, so there will be further phases in the ESG transition. There will be actually even more to do and more risks and losses, but also rewards to take into account. So, having started your ESG journey in 2001 at Groupama AM, are you ready to take on the challenge?
Well, I really appreciate the fact that we are speaking about risk and losses and also opportunities, because this transition, it's also a place where capital could be channeled toward solution to all these problems. So, of course, all of us, we agree today, and we need to be very processed in taking into account all these risks. Florika mentioned, and Margarita too, and we are responsible here as investor we are investing our clients' money, yeah. So we do our fiduciary job to be very careful in investing according to these rules and these criteria, and to take into account these losses. But we also have a role to play, because today this solution toward new trajectory of 1.5 degree and other rules and other metrics and other industrial politics of EU need capital. So if we also make our job to channel these flows toward industries and technologies, being able to invent, to create this new solution, it is also a role we need to take on. And when we speak about ESG, we have all these ESG criteria, but I fully agree with Margarita. The next step is impact investing. And when we are speaking about impact investing, it means we need to be able to explain to our institutional investor or retail investor that the capital they give us to invest for them are channeled towards solution for our for this transition into tomorrow world. And I think we need to be able to see also these opportunities and give this new generation facing these problems, because many of us will not be there in 50 years, 60 years, when these effects of the global warming will be more sensitive, but this new generation need hope and visibility about the future, and we also need to give them visibility about these new industries and this new solution where we can invest for them, long-term investing, and produce also this virtual circle where capital is flowing into new solution, bringing a solution to the global economy and creating return, and this return go back to clients and create social wealth and stability. And this is a virtual circle where we have a role to play. So I think we have, as an asset manager, a role to play in investing, in explaining, and in education. And we, for sure, could make the difference in this balance between risk and opportunity. But don't forget also opportunities.
Excellent. That gives us actually a very good transition to the second theme of our panel debate, which is about not solutions this time around, I'm sorry, but rather some problems we've been facing on the way to our ESG transition. Of course, there has been lots of comments, either from NGOs, industry associations, and other types of organizations involved in ESG about whether the European Green Deal makes a lot of sense or not, and what sort of solutions we will need to implement to actually deliver on it. So Mirela, my first question would be addressed to you. So what are the obstacles, the hurdles that you've been experiencing, either as Groupama Asset Management, but also on behalf of the entire French investment management community on the path to ESG?
Well, there are challenges. Yes, we cannot say this is easy. Many of them come from this very high speed of the regulation we need to cope up. And also sometimes the sequencing of this new regulation is not the best one we can face. Just to pick one example, asset manager will have to disclose information even before data is made available by issuers under the new corporate sustainability reporting directive. So we have sometimes problems to be able to be in line with the regulation. On all the regulation, which sometimes don't speak one to each other. So this is hard for us, and also difficulty to have a delivery of technical regulatory measures to make us be certain and to have clear guidances how to comply with the rules which are put in place. This is also something which is a challenge for asset managers today. Different countries advanced at different speed, path toward ESG. Yeah, in Europe, in the world, we see that there are more advanced countries and some of them not so advanced. So a lot of local initiatives created in different countries in terms of ESG or ESG framework gave a more complex environment to work for asset manager. If you want to create a product with initiative on ESG in France and to propose them in Spain and Italy, you could, or Belgium, you could find different way to look at ESG in these countries, and you have a more complex framework, which make our job more difficult in terms of global development, and it also an issue we need to take into account related to the single market for ESG investments. We don't need to let this local initiative create such a complexity in EU. We need to move toward a more efficient way in Europe to have these rules. And I think what we will be more happy to have is stability in terms of rules, because it's very hard for asset manager to cope up with such an big movement in rules. We need all of us to invest to grow our capabilities in ESG. It's very difficult to do this today because the major part of our investments are flowing to be able to keep up the pace with the regulation. And this make very hard the possibility for more mid and small size and mid-size firm to be able to keep the pace. In France, we have 680 firms operating in asset management, and 70% of them have less than 20 employees. So it's very hard for them to find capacity to invest in all this new evolution, because the major part of the investments are absorbed to be able to keep up with the regulation. So it's not an easy exercise still.
Thank you, Mirela. Also about the figure, quite striking that 70% of French asset managers have less than 20 employees. I don't know, Florika, if this is a figure you expected. Of course, trying to get a full understanding of all the rules, starting from the taxonomy up to SFDR, CSRD, etc., will be quite difficult for those smaller firms. However, we just discussed the fact that these firms also have a role to play in educating institutional investors and retail investors alike about ESG developments and trying to set those investors on the track to better understanding ESG. Do you think, Florika, that asset managers have a role in this respect? And if so, would you have any suggestions for them?
Yeah, I think it's a little bit what my fellow panelists just said, and myself as well, that you need to disclose information, and I think your industry has a very prominent role in informing, be it investors or particularly the retail investors, on how sustainable products are. And when you talk about sustainability, it's about sustainability, but also of the risk, of the losses, and as it was said, the opportunities. So I think especially the financial intermediaries, they need to know what information is out there. And I hear what was said. This is often perceived as an extra burden, as red tape, but also as cost into, as I said, perhaps IT development. But the aim of all the regulatory initiatives of the Commission is always to introduce environmental disclosure or reporting requirements. Why? To ensure full transparency, but also comparability of information provided. And if you, if you take the Corporate Sustainable Reporting Directive or the Sustainable Finance Disclosure Regulation, all of this is about providing comparable data to show what are the financial risks linked not only to climate, but also to environment or environmental degradation and ecosystem degradation. And I think this is something which is becoming more and more obvious. I mentioned already our study where we will go into that, but it's, when you also speak to reinsurance companies or others, everybody wants to know what would be the risk, the losses, but also the opportunities. And I think, yes, there is an investment to be made, but as I said, we want to have a comparable data, and therefore we also go for the same indicators. And my message would be not to be afraid that it is all one big burden. I think in the end, your own clients want to have this data. And if you want to be profitable in the future, you need to disclose this data. At the same time, you also have as I said already, a important role in the overall systemic approach for the financial market. If you were not to disclose the data, or if you were to go into greenwashing, you say everything is hunky-dory, you even face a reputational risk, which might be very nefast. We have seen that now at Deutsche Bank in the US. I mean, it doesn't help to pretend, let's say, you really go into that. I think we always in our regulation take care of small-sized industries as well. But if you look, there is, and it has been said now, I think in all our interventions, there is a link between climate change, biodiversity loss, environmental degradation, and public health. And if you now put all these pressures together and you combine it with other factors, you might even have more pandemics, more diseases. So what does it mean? Do you go into the wrong products or in the better products, which allows you a long-term yield and a long-term sustainability? And I think that's where we have to go. That's why basically all the sustainable risk talk about for instance, this alternative investment fund managers directive. I mean, it's the whole mouthful, but all the initiatives that we are bringing forward now, they always look at the sustainability risk, which have to be taken more prominently into account when assessing an investment risk. And I mean, for climate, it has become quite obvious with the floods and the rest. And we publish reports, but it is not yet mainstreamed. But I think the market will show it, and the clients, your clients, will ask for it. So I'm well aware, and we are also certainly well aware about how to minimize certain red tape and also administrative burden. But at the same time, we can also not avoid going on to disclosure and reporting requirements. Otherwise, you would also have this competitive disadvantage. So I think it's all about making the market, the transactions clearer, and base it on the right data set. I think that's where we have to go towards. And that will not only happen here in Europe, it will happen elsewhere. I mean, the needs to invest into sustainable, let's say in renewables, but also in infrastructure, even into biodiversity projects, nature-based solutions, which was very, very strong in Glasgow. Everybody will go into that because all the states, and it's not just Europe, will face the same global crisis. So they all search for answers. And therefore, I think it's a global market. And it just happens to be that EU is a little bit further advanced, and we are very happy that the taxonomy can help here. But we are perfectly aware that there will be other standards emerging as well. And that's also okay.
Thank you very much, Florika. Then, if I may, is also the message, your message, that organizations like AFG, and here being represented by Mirela, should also share that message with their own members to educate them to the fact that this is also about building opportunities to have a sustainable business going forward, and just that possibility, that ability to still create value for investors.
Yeah, and I think that's what I take also from Mirela's interventions and from the others. I think the whole business is going towards that. It takes a little bit of time. I mean, let's face it, also, when we come from the regulatory side and we talk to industries, you always have the front runners, you have always the first movers who then, have a certain advantage, but others will follow. And I think in the long run, nobody will completely escape. As I said, find an investor now who wants to go into a coal plant or in fossil fuels, or everybody is going out. You can still invest in it. It is still possible, but if you want to have a long-term yield, I guess you go more in renewables, or as I said, an offshore windmill. But it's about the long-term horizon. If you go for short profits or very long-term profits, I mean, it's a different investment model, probably.
Thank you, Florika. Now turning to Margarita, because there's one thing we certainly all have in the back of our minds, and that is the topic of how to make sure that that information gets to the right people, and that these people are able to process that information, and these people feel being involved in the entire investment process. So one key thing, of course, is the topic of inclusiveness and justice. in the ESG transition. How does that relate to some of the issues you've been working at the PRI? And how do you assess what Europe is doing versus what you think the needs are on the ground?
Yeah, thank you. This is indeed a very important topic. And I just wanted to add, following what Florika just mentioned, this transition is towards shared goals that are important to all of us. This is about a stable environment in which humanity has thrived for thousands of years, and the data from the climate science really shows us that this will impact our futures, our countries, our cities, the way we do business. So it is in our common interest that we address that together. So this climate transition needs to work for all for it to be successful. And this is the topic of what we call the just transition. It has to be designed, planned, supported by policies that take into account the interests of communities, of beneficiaries, that support companies to transition as well. So it's also to support the interest of businesses, small and big. This is the only way that we can make it work. The acceptability of the climate transition is important. It's not going to be easy. There are many sectors that, according to the taxonomy, are not sustainable, and well, that's the reality of the market. Only a couple of % of the economic sphere out there are today aligned with the goals of the Paris Agreement. And this doesn't mean that the rest is bad. This means that we have a lot of work to do, and we have to do it together. And the taxonomy, the EU taxonomy as it is designed today, is an important signal for the markets, for investors, for investees, for beneficiaries and society more broadly about the scale of this transition. So it has to embed, so the climate transition has to be a just transition, which signals the importance of social aspects in the policy framework and investment strategies. But I wanted to also touch upon a few things that were mentioned earlier, which are about consistency and stability of the policies that define the rules of the game for the investment community. So the consistency is very important, and an example in the EU is the taxonomy, which is really the bedrock of the disclosure requirements and the tools that are made available to investors to plan this transition ahead. So it's very important that those tools are science-based, objective, and that they can have the trust of the markets to know, okay, how aligned are we with those climate goals? So the consistency and the stability of those tools is very important. However, the transition is complex. It is about overhauling the entire financial system. This is not something that we do, just like this. It's because it's really important to do so. It's really important to realign capital markets with sustainability. So the taxonomy alone will not solve the transition conundrum. So we'll need many other tools in industrial policies and disclosure requirements and tools that are tailored to the different types of investors and to the sectoral transition plans, etc., etc. So the taxonomy alone will not solve this. And I mean, you're certainly aware of the discussions currently going on the taxonomy, and it's important to distinguish what the taxonomy does, which is serving as a beacon for this very steep transition ahead, but also the need to tailor other policies beyond the financial sector, industrial policies, sectoral policies, and, for example, an energy policy to drive the transition of the real economy, the industrial sectors that are most impacted and most relevant for the climate transition. So it is complex, but after all, financial regulations are complex, and getting hands-on with the financial transition and with the business transition of investors and investees alike is a good choice, and one that all stakeholders need to work on and need to need to get their hands on to get the transition really effective and as soon as possible.
Very clear. Thank you very much, Margarita. And that gives us yet again a very good transition to the third part of our panel debate. When we prepared the panel debate, one topic came up, and that was that of data. And Florika commented quite a lot about it, referring rather to information and data, but this is, I suppose, something we can call just data in general. It has emerged as a crucial topic for the ESG related work streams in Europe and in the rest of the world, because we've seen a flurry of initiatives related to corporate reporting, a single European database called ESAP. There's lots of intersections between the taxonomy and the sustainable finance disclosures regulation. International regulatory forums such as IOSCO for asset management have been looking into ESG ratings. We know that the US Securities Exchange Commission is also looking into this, and there is yet again another initiative at global level to try and make some sense of corporate reporting that relates to ESG data through the IFRS Foundation and their new forum called ISSB. So, Margarita, you said we need that data. We want to just have more free flow of data between stakeholders. We got in one question that is quite interesting about data providers, which is actually some of the issues we mentioned in our preparation for this debate. But the question to you, Margarita, is how do we make sure that the data we give remains relevant across work, across investment channels, across different types of investors, and also stakeholders like PRI, NGOs, any sort of analysts? How to make sure it remains adaptable and understandable, bearing in mind that commitment to justice and inclusiveness that you commented about earlier.
Yes, I mean, it's the prerequisite of all responsible investment, right? We need standardized, comparable investment grade data on ESG topics, so that investment analysts can incorporate it in their analysis and in all investment decision making. So first thing to get meaningful data is to get data that is comparable on a baseline across markets, industries, portfolios, and this is why we welcome the establishment of the International Sustainability Standards Board and the work of the IFRS and IOSCO on a global level. This is a very welcome development. We need an understanding across markets on what CO2 emission scope 1 means. How is it calculated? We need to know, we need to be able to compare, for example, indicators where relevant on water use or consumption. We need to have the same building blocks for ESG data. So the comparability is a very important aspect. The second thing is that we need quality data. We need data that investors can trust. And therefore, there are discussions around data assurance and where should this data be published. And our view is that all material information should be published in In financial corporate performance reports, this is data that indeed is needed by investors, that is of interest to beneficiaries, etc., etc. So those building blocks need to be data that can be trusted. Hence the question of treating this data not like non-financial data, but like financial data, because it is relevant for investment decision making. And the last aspect that we're really looking for, and this goes beyond what I suppose the ISSB will be focusing on first, is data that can inform real world outcomes, the impact of investment decisions, this topic of shaping sustainability outcomes that I was talking about previously. And this is something that, for example, in the EU, policymakers have been looking at how to set standards that allow investors to measure and manage the impacts of their investment decision making. So sometimes these are going to be the same indicators, but in some situations, these are going to be different indicators, different measures, different standards. So eventually, this question of providing data for the double materiality perspective, or not looking only at data points that inform risk management, but also data points that inform investing for sustainability outcomes will be very important. So those three things, comparability, quality, and outcomes, are key elements of setting a framework that will provide investors with meaningful ESG data.
Thank you, Margarita. And before turning to Florika, I just wanted to ask the following question to Mirela, because I think it echoes, or it's sort of a follow-up to what Margarita said about having shared goals and everyone in the value chain having the same overall long-term goals with the ESG transition. What do you think about the relationship between asset managers and their data providers, assuming that your data needs will just skyrocket in the next few years, as you will need further data to assess investment opportunities and risks, but also you will need to disclose yourselves more data about what you're actually doing as investors?
Yeah, you're right. So it is really a very central topic for asset managers, this problem of data. And we do agree, we would like all of us to be able to rely on the data we buy, because you need to know that asset manager need to buy this data. Unfortunately, as we all of us know, the data provider were for the last two or 3 years acquired by non-EU shareholders, and we have a little bit of an oligopoly in front of us, setting up prices going up every year with 20%, and our volume of data is bigger and bigger every year for all these reasons, because we need to do this job well for our investors. And this is really a very important topic, and it is important for our industry in terms of capacity to access to this data at a normal cost, which as of today is not true. Yeah, we are again in face of an oligopoly of out of euro shareholders giving us access to data, which is more like a tax, but it's also a problem of the risk on the capital market union, because the standards applied to this data, to these indicators, we do not have such a good disclosure of the methodologies and analyses which are put into this data, and we have less control on what it is behind every indicator. So we fully support this European initiative with AFG to be able to create European standards, to design these European standards. For us, it's very important. It's also a matter of European sovereignty, because we hope these standards will serve as a gold standard for future work at international level, and these standards will be, and this indicator will be more in line with our view of our mindset and our goals, European goals in terms of ESG and political and industrial and political approach to this indicator. So it is really a very important topic, and the time to action is short, because the things are going very fast now, and we think we are a little bit late also in this area, but we need to be very careful about how this data and how the professionals in Europe have access to this data, and what are the standards behind every indicator we use, because it's not the same thing to define what it is a clean energy, what it is a good indicator in social governance, if the standards are European standards or setups are elsewhere, and we don't have the methodology and how they are made, and what goals they are serving in terms of flow of capital toward this company having these indicators. In terms of needs for us, on the data level, our needs are only growing and faster, and I think it is very important for us to have quite quickly solution to this problem. Maybe why not this European Central Database, ESAP, which could be a very useful tool to diminish our dependency on US data provider, but also to serve a wider community of stakeholders with interest in data. Anyway, we need to have a very global view on this data problem, because it's central to the development of our industry, and in our mind it's also central to the success of ESG investment, ESG policy and ESG transition.
Excellent, thank you very much, Mirela. Now turning to Florika. So information, data, these are of course very crucial, very central to the well-functioning financial markets. But Mirela just testified to the fact that there are still some inefficiencies that might get actually stronger over time, especially in terms of who acts as the gateway to the data you will need to assess investments, benefits, rewards, risks and losses. Someone in the Q&A tool, and please in the audience keep using it, someone asked the following question: ESG data providers remain largely unregulated. Is any harmonized regulatory framework at EU level envisaged in the short term? So of course, Florika, you may not have the answer to this. It might be somehow quite a new topic to you, that there are some strong struggles between data providers and their clients. But how does data governance rather fit in the overall Green Deal? Is it something that is embedded as part of it, or is it something over which you will need to build your own understanding over time as EU regulation evolves, with the European Central Database, ESAP, with the taxonomy being implemented, with the corporate reporting being implemented in the next few years?
I come in a second to ESAP, but let me first say, and I can only echo what was said, the availability of data, but also, as it was said, the comparability of data, the quality of data, clearly is absolutely crucial for the success of making that transition, right? It's a necessity for informing investors, but also on the alignment of issuers and financial products. And that's when you said, how much do we embed that in our regulations? Well, if you look at already what we do have, the Corporate Sustainable Reporting Directive, it will provide the necessary information on this alignment of corporates with the EU taxonomy and the transition or the Green Deal objectives. So because this information will be used as the information that, let's say, investors and asset managers have to put in the description or in the prospectus that they are required also by the Sustainable Finance Disclosure Regulation. So I think there is a system behind, but I think the problem is that today the financial or sustainable related information on financial products is quite scattered, and it's actually fragmented across member states, even across not only access points, but also in languages. I mean, there's also a language barrier. And this fragmentation is also potentially a barrier to investments, and especially if, as I look always at the internal market, it's for the cross-border investment. And that's why I'm quite happy that several of you have already now alluded to this idea of the European Single Access Point, or the ESAP as it was called, initiative, because one of the aims is indeed to make the necessary data available, but also transparent. And the idea is to become a common source of public, but also free information about EU companies and investment products, regardless of whether they are now located in the EU, where they are located in the EU, and or where they originate. And I think this would make investment opportunities a bit more visible, makes perhaps easier, make funding perhaps also more accessible. But it's true, it's not yet there. We are in the process of launching it, and we are in the phasing in approach. So I think it will fully operational only by 2024. So again, we are lagging a little bit behind, and we're running it behind, but it is at least identified as really there was a lack of it, and we are starting it, but we never do it alone. We always do it together with industry. So I think that's where we're heading at.
Thank you very much, Florika. So indeed, it sounds like the European Commission is really looking at this from the widest perspective possible, with even including that extra step of providing data for free to all stakeholders interested in getting a good understanding of what's going on in the market and in the rest of the economy. Mirela, I think we just got one question in from the audience, and that relates to the increase of your data needs, and I will read it aloud. So, how much are increasing data needs driven by regulation, or because investors have identified, quote, known unknowns, unquote, to make more sustainable investment decisions?
Well, I don't know exactly if I can split it between regulation and what the investor are asking, but the data budget into an asset management company, it's one of the most fast growing budget for all asset manager. For sure, let's say for the last, if we look forward, we have an history of more than 1 decade, yes. So the regulatory needs of this data was lower because regulation was reinforced recently, and it was mainly because we wanted to provide investor looking for this type of products before, and we need this data for them. As of today and for the last 2 years, let's say the major part of growing of these needs is related to the regulation, but I am quite sure that we have a balance between both of them, because anyway, if we go toward impact investing, which is for us the next ESG investing, we will have apart from this regulatory demand for investors to be able to prove that the impact we had with the capital allocated to these industries, and here it will be more related to the investors' requirements. So a balance today, much more toward regulation today, but in the future it could be again a balance toward investors because of the impact investing.
Thank you very much. Very clear answer, Mirela. I think we are reaching the end of our panel debate, but just wanted to get your views on one last question, all three speakers. So what would be your 1, 2, or 3 main queries or hopes to further unlock the role of asset management in delivering Europe's green, inclusive and digital transition? Over to you, Mirela.
Well, my hope it will be to not always present ESG like avoiding a big threat, which I do agree it is an issue, but it also a way to make a better world tomorrow and find opportunities, because it's very depressive for young generation always to think that if you go into an ESG product, you will have less performance and you will do it only because you need to avoid big risk. It's also a time for us to make investments more close to the younger generation and more close to a better world tomorrow. So if I need to say about one wish for tomorrow is to seize this opportunity of ESG to make a bridge between the new generation and investing in industry with impact for tomorrow.
Margarita, same question to you.
I would say one thing that we spoke about earlier is that ESG investing or ESG incorporation is not optional. Responsible and sustainable investment is not optional. It is a new baseline. And this is the mainstreaming. This approach is really the only way for us to tackle effectively and optimally the zero carbon transition. The second thing that we didn't speak a lot about, but this is really key, is stewardship and responsible active ownership by investors to support and promote the transition of their investee companies, of the assets that in which they're invested towards net zero, and being active owners and actively and vocally supporting and expecting transition plans is really important. And the last thing that really matters is that we do focus on outcomes. This is really the new frontier for responsible investment, setting deliberate goals and systematically pursuing those goals alongside the goal of financial return in order to make the transition happen. So the focus on outcomes is really a priority for us and something that we'll be working on in the months and years ahead.
Thank you, Margarita. And now over to Florika. Your hopes, queries, expectations to deliver more.
Well, I would also rather like to end with a word of encouragement, because it is true we are in the middle of an enormous transition, one that we have to go through. Has been emphasized, but at the same time, this is not just, as it was said throughout this panel, it's not just about the risk that they are there. It's about the losses that we have to calculate in, but it's also about opportunities and about the long-term sustainability, about how we want to, preserve our global health and on the planet. So I would rather end with a encouragement, because while we will certainly, from the regulatory side, look at what was called the real economy, we will give clear standards and on products, on all types of outcomes that we want to see. I think we have a possibility, and I come back with a bit of jargon, but it is, we need to, finance the green, but also green the finance. And I think if this is a little bit more understood what it means, I think we have a good chance to go relatively quickly into that transition, which also will spur actually the financial market. So I would really end with a word of encouragement.
Thank you very much, Florika, and thank you very much to all three panelists. So Mirela Agache-Durand, Vice Chair of AFG, Florika Fink-Hooijer, Director General for the Environment at the European Commission, and Margarita Pirovska, Director of Policy at the United Nations Principles for Responsible Investment. Thank you very much to all of you for joining us today. And now over to Eric Pinon for the closing remarks. Your mic, Eric Pinon, you're on mute.
Yes, sorry. Mesdames, Messieurs, dear friends, special thanks, Mesdames and Alois, for this good debate. It's my pleasure to close the new edition of our European conference. The message from our speakers is very clear. Asset management will play an important role in making Europe more sustainable, more digital, and more inclusive. This is because our industry has become an important source of funding for the European economy. With more than 4.5 trillion euros invested by the French asset management industry alone, this means our industry has a responsibility for making change happen. I will not complain about why regulation is costly or why it's make our life complicated sometimes. But I will say this, regulation can be an important driver for change. We see this with the reform of corporate reporting. If we get it right, it will help to put capital where it's needed. If we get it wrong, it will only put more money in the pockets of American data providers, and we will not have good quality data to create more opportunities for citizens and companies. This is why European asset managers support the proposal for a European database called ASAP. It will play a big role in European data sovereignty. The issue by following new ESG rule is that we will have to share data before it is available with more corporate reporting or via ASAP. This is a new data paradox. Asset manager must choose and report data that does not exist yet. We must address this paradox very quickly before others do it for us in a way that is not compatible with European standards. Our European mindset is our most precious asset. French asset manager wants Europe to be successful in the world. AFG and European authorities have the same goal, and we must work together to make progress. I will thank all the speakers today. Their active participation shows how much they care about having the right rules for the European asset manager sector. In particular, I will thank Clement Beaune, who took time to share his priorities for the French presidency. Monsieur le Secrétaire d'État, it was an honor to have you with us today. And I hope we will continue our discussion to make your ambitions for Europe a reality. Thank you very much. Merci beaucoup. I hope to see you next year. We hope in real with my 3 vice chair and all the AFG teams. Good evening to everybody, and thanks a lot for every good news of this good debate. See you very soon.